Well, hi there. It's Cameron Moss, your Out of the Box lender, here with a tip on refinancing. With the interest rates being at near all-time lows, a lot of people are asking, does it make sense to refinance? And in a separate video, I talk a little bit about changing the interest rate on the same term you're on. What I want to talk about in this one is, what if I wanted to shorten the length of my mortgage and go from maybe a 30-year to a 15-year? That can be very powerful to save you tens of thousands of dollars. Let me show you real quick how that works. Let's pretend for a minute that you've got a $100,000 mortgage that you owe, and your current rate on a 30-year note is about 5%. The payments on that are $536 a month, and over 30 years you will pay a grand total of $192,000 and some change. If you went to 4.5% on a 15-year, your payments would jump to $765, but the term drops from 360 payments to 180 payments. So the cool part is now your total payments are $137,700. That saves you a cool $55,260. That's real money, even for Bill Gates. Probably tip money. But in any case, it's real money to be saved. And the question is, it's not just in the interest rate, though that's a big chunk of it. To drop down a half a point, that's great because it saves you a bunch of money. The real power in going to a shorter term is the fact that you pay it off faster. And if you can get both, you can go from a longer term to a shorter term and drop the interest rate. Very powerful stuff. The question is, can you manage the $230 there, which is about 30% increase in the payment? If you can make that cash flow adjustment and you've got lots of extra cash flow, you got plenty of money in your budget, it's a great thing because two things happen. One, you get to take advantage of that really low interest rate that's only available on the shorter term loans at 15 years, usually about 0.5% lower than the 30. So you save a bunch of interest because the rate's lower, but you save a bunch over the term by paying it off much faster. So your payments go up. All that difference goes to principal. So you're knocking off $200, $300, $400 more a month every month. That's what pays it off faster. So if you're in a position that you can afford to make the larger payments, a 15-year is a great thing to do right now because those are running pretty low, 4.25, somewhere around there. In today's market, they're very, very cheap, very inexpensive, and you might even be able to do it for free. Where with a slightly higher rate that we can give you, we can cover your transaction costs, and you pay nothing to make this change. So that may be an opportunity to explore. Give us a call at 317-348-1770, and we'll answer real quick whether or not it makes sense for you to look at jumping from a 30 to a 15-year mortgage and save a cool 50 grand on your $100,000 loan. It's Cameron Moss here with your tip of the week. Make it a great week.